Hey everyone, welcome back and thank you so much for taking the time to support the channel, checking out this daily GameStop technical analysis and options chain overview. Getting right into it on our 15-minute chart. We have this morning a bearish order block formed off of this market structure shift. This is to be expected. We are filling our gap on the 1 day created by the bonds. Um, you know, 2 earnings ago now. It seems like just yesterday, but it was actually some time. So this has been the play, technically speaking, ever since we entered the gap here. A lot of traders will be taking profits at the top of this gap this morning. So it's only natural that we get a retracement off of that profit taking, right? Bringing us back down to our sell side liquidity here on the 15. We also have that lining up with a 1 hour bullish order block, retesting that from the other day as well, which we'll touch on in just a second here. So, our EMA is reverse. We're crossing below the 200 as well. So I preach all the time about a bullish reversal signal to go long on. And this is the exact opposite, right? This is the bearish form of that, where we have the EMAs reversing and then pairing that with a key level break down instead of break up. So we'll see how this pans out going forward into tomorrow. I don't expect a lot of buy pressure tomorrow, as today was the last day to buy warrants, the rights to them, right? So I imagine that we will trend towards max pain. However, the chain is absolutely loaded with a lot of support in the money calls acting as support, right? So how far down they'll get us, we'll have to see, right? Of course, we still have the mechanics of the warrants being hedged by the potential short sellers, as well as the confirmed short side arbitrage players, right? As the price climbs higher, they are going to be adjusting their hedge, which should be additional buy pressure for us. So, now that you kind of understand what's going on, why we formed that bearish order block, why we're retracing, where are we going to retrace to, right? Because overall, things are still bullish, right? Other than filling the gap, which is just something that the technical traders are doing, and typically I would be taking profits here, but the fact that the warrants, are right here and the record date, right? So, and then the ex-dividend date tomorrow. So you need to be holding your shares. So it's an awfully bad time to be taking profits, as far as I'm concerned. So we're holding on, and hopefully, sooner than later we can retest that upper band and maybe even break through, right? So that's what we've got going on within the 15-minute chart. Moving down to our 1 hour chart, here we get a little bit of a clearer picture. Marking down that 15-minute bearish order block here, just so we can see it within our other charts, and the same as the 1 hour bullish order block that we're snagging from over here from the other day, right? So, and that's gonna just make things easier, because we see we're bouncing off that here on the 15-minute chart, and that's why, right? That the sell side liquidity, we know why we're bouncing there, and we're not scared of a free fall into oblivion. And even if it does, then we've got other zones and indicators that we're watching for to make sure that we do hold support. Because as we climb up, profit taking is natural. Things cool off, the momentum resets, and then they go again, right? We just made new highs for the week, and you would expect it to come back a little bit. So maybe a little bit painful for people, but it is what it is. So moving out from the 1 hour, we are having that bullish order block sell side liquidity retest. If it doesn't hold, look to our 4 hour, and then on that we have the bullish breaker block, which we formed and did expand out of, as one would expect. And again, technically speaking, if you were trading this, you're re-entering in on the block. And let me turn the magnet off. So maybe you get midway or even a bad entry, right? And then your stop loss is below the block. and you're swinging for a one-to-one trade. That's how technical traders are doing this setup. And this was such a nice play. It went to a 3-to-1 risk reward. So that's how people who are not invested in GameStop long term are playing it. Of course, myself personally, I expect a little bit more, right? So let's see if we hold this, right? If we don't hold this, then we can look to retest the 4-hour order block. And we should see support there as it's going to align with the 200 as well. And it wouldn't be the end of the day. That's something that we would expect within a healthy trade environment. If it catches before that, it's even stronger than healthy, which is a massive sign of strength. Moving up from that, we'll come back up here to our 1 day. And then again, you can see these still there, because the thing about the 1 day is it doesn't contain information from pre or post market, which is fairly relevant in GameStop's case. A lot of the times when it makes a high or a low, it is in the extended sessions. So here we have the volume imbalance created the other day, and that's going to be the space between the candles where the wicks overlap, and we are holding that as massive support, right? The bodies of the candles holding above that line, which is, not bad, pretty cool as far as I'm concerned. And we also have our bullish Golden Cross here. I guess all Golden Crosses are bullish, otherwise they're Death Cross, with our exponential moving averages. Now, the EMAs move a little bit faster than the simple moving averages, and I can actually show you that. If we go to our MA ribbon, and then I'll just bring this over here, and we see how the 50's crossing the 200. If we change these to our simple average really quick, then you can see how the 50 is all the way down here still, and the 21 is about to cross the 200, which is still super bullish in its own right. And it will take a while for this simple average to get above the 200, which is your classical Golden Cross. I don't like to wait for it personally. If it's going to set and hold, the exponential average is fine, and we're getting in on that early. Just be aware it could, whipsaw back on itself, right? This could come back around and flip against us. But if you manage your risk, then that's no problem, right? And you just put a stop loss there if you wanted. I should not have done that. I can just zoom in and exit that. It just immediately triggers. No! Which is fine. I mean, you just buy them back. It's whatever. Anyways, that's what we're looking for on the 1 day. I want the volume imbalance to hold the body of the candle on the close of tomorrow. If not, then I'm kind of looking for the 4-hour order block to hold, and, worst case scenario, and that is it breaking through all 3 exponential moving averages. And currently, the 21 is our primary support. Last time we bounced right off it immediately. Not unlikely that we do the same again at some point here. If it did break through, then we look for the 200 and the 4-hour. And then our final zone will be the bullish breaker block, which sent us through to this journey so far. I don't expect that. And if that broke down, help us all. We have our bottom trend line, right? I don't think we go back to the bottom trend line until post-warrant, environments where people have kind of exercised those, and we've had the dilution hit, and they spin that however they will, and maybe at that point we come back to the bottom trend line, and we can start this process all over again. So, moving into the kitty indicators, RSI rejected 70, unfortunately, and now we're coming back to the trend line, looking to see if this can hold, right? Of course, we are looking for the moving averages. These are simple averages here. The blue is our 20, the red is our 50, and the green is the 100. Just looking for those to act as our support here. And then on the bottom, on the 4-hour, we can see that our PMO is rejecting again, which is really, really bad. So hopefully within the next day or two, we get some volume, which there was a little bit of today. 14 million volume today with an average of just under 10. That's in the right direction. I'd still like to see 20 to 50. Hopefully this can reverse back over itself, because if it doesn't, then the 1 day is in danger of swinging back in on itself, right? And that's something we definitely don't want at all. Our momentum, is still here, right? Our MACD is still positive, but fading nonetheless. So we're going to wait and see how that all plays out tomorrow and next week. These are all lagging indicators, right? So all it takes is volume, and that volume is going to, push the price up. And at that point, the indicators will follow, right? So just because today we retraced off the top of the gap and may retrace more, and the indicators look like they're all turning back against us, it doesn't mean that they're going to stay that way and they can, whipsaw right back bullish again quite quickly, just like we did last time, right? Like, this looks so scary, but then boom, we're back, and even stronger this time, right? So we'll see. Again, as far as the warrants go, we'll get those next Tuesday. I don't expect a dump in price. Like, we can have a trend retest and a pullback, fine, but I consider the trend likely to continue if we're under 32, right? And we're going to get terms and conditions for the warrants. I assume there's going to be an early expiry clause in here. So if we're maybe trading above X% for 20 of 30 days, then the expiry will adjust. And this, in my opinion, almost lets the shorts off the hook. It lets you know, well, the price that's already the price movement, we're up X% since the announcement. That already lets you know that the warrants work. And this is like a rev limiter or something like this. So we can't squeeze them into oblivion because of the early expiry clause, right? So it's going to force everyone to exercise, when we're at 35 or 37, instead of just continuing to hold them at 37 to 50 and so on and so forth, right? So that's just my take on that. Kind of a bummer, but at the same time, that's okay, because when we can do this consistently, right, that's the key to things. As it's not hard to get a 40% move on an options contract. Now, I know many of you aren't playing options. That's okay. You can still kind of do this with your shares a little bit. It's much easier with your options, but a 4,000% move versus a 40% move. You'll need a 40% move 11 times to outweigh a 4,000% move once, and it's much more likely to get a 40% move than it is a 4,000% move, right? So if you can consistently stack those 40% long term over multitude of years, you're going to come out ahead. And I think that's maybe what we should probably get used to as a mindset. I know a lot of people just love to hold forever, and that's okay. But scalp around your core position, right? When we are peaking on the RSI and the price is at 77, don't say, okay, it's going to 700. Say, okay, it's time to start scaling out, and then you sell a small percentage of your shares. If it keeps going, you can continue to scale out small portions, right? And then buy back in on the dips. That's personally what I do, not only for GameStop, but all of my trades, and really what all true traders do. Or else you're just in the whipsaw forever and you're diamond handing for life, and that's okay. But it's not going to be easy to grow your stack, right? Adding to the pile coming out with more shares. So personally, I love the options. We do have maybe some education to go through once things cool down here to get everybody on board, because it's really, really quite easy to do. Like, even though, like, I bought a lot of my options currently when we had the bonds, and I got theta decayed because we didn't have the arbitrage that we expected. But even with all of that, because I bought them respectfully at the money, in the money, with the right amount of time, they're still bright green with this move here. So, if you time it better, and we did average in a little bit, which is to help that. But even when you get it wrong, the moves are so aggressive that they're going to pay off for you, right? If you didn't buy in early for the bonds and you waited for the actual signal, you'd be doing far more than 40%, and you wouldn't need to do it 11 times, right? But 40% on the low end is even easy when you kind of mess things up and are learning. So some rambling there. That's not super relevant. But I know a lot of people are maybe looking for this massive 4,000% move when they could be, converting on these 40% moves consistently multiple times a year. And, over the 4 or 5 years, now you've got your 4,000% move, and are still waiting for the 4,000% move with an even bigger pile, right? And that's the mindset that I like to be in personally. So with that being said, IV is up, which is nice, even though the price is down. Interesting. So if we get the price back up, the contract should be really good. We're still subdued, and we get the chain split. So I don't know how that's all going to play out. I think the liquidity could dry up on the old chain, and that could be really bad for us. However, maybe there's high demand for that chain because of the warrant deliverability tied to it. We're going to have to wait and see. That chain should also price up once the warrants are included to it. I don't think it's going to be a large percent by any means, but like maybe a percent or two. And so really interested to watch the IV play out next week, right? Max Pain, 25.5, not really moving up at all with us throughout the week, which was interesting because it probably should have. We were at like 28.4, LOL. And that's kind of telling, right? So we're tracing back to that. However, there's a lot of support for us. Short term, 26.5 to 28.5 with a pin tendency near 27.5 maybe. And then, our support, 27, 26.7, 26.5. Our deeper magnet, if things really look bad, 25.5. Resistance, 27.5, 27.8. And, maybe even on the top end, 28, 28.5. And the very, very top end, 30. Now, we've talked about this day after day after day, how the, massive 30 wall here on every single expiry possible, right? Which is really aggressive. And I think there's a good chance that unless something breaks, we continue to bounce below it until the monthly OPEX of the 17th comes to pass, at which point there's a lot less on chain, right? Then instead of, like, what is this, 45,000 calls, 49,000, and then moving out, there's nothing, right? It's absolutely barren in comparison to that, which is really good for them. It still exists a little bit, and not all falls away. Like, the support is still here long term on the leaps, right? Which we're trading in bulk today. So on that note, really interested on these leaps tomorrow, the open interest. We want to compare. Were these added or were these sold on the gap fill? Responsible trader probably sold these on the gap fill. However, we are in a strange time with the warrants coming out. So maybe they were added. I don't know. Could be. We'll have to wait and see and compare the open interest tomorrow, right? What are we at here? 27, 37, and 46. So checking that out. Kind of getting a little bit ahead of myself here, though. Our midterm, 24 to 30 until weekly close above 28 sticks. Our bull pathway is a weekly close above 28 and persistent call build at maybe 28 to 30 with a test between 30 and 32. If we can hold over 30, it's going to open 34 to 35. Our bear pathway is potential, right? Weekly close below 26.5 with a rising put open interest 24, 26, test around 25, 24. And even that, like it's not even that bad, right? So we're gonna be watching the October 17th date with both of our eyeballs for OPEX positioning. We have our open interest trends, 28, 32 calls. Are they getting added, right? What's going to happen here? This is the big day. Are we going to be pinned under 30, or does something give and we break above? And I think watching the options chain into it is going to really tell the tale. Long term, out into those leaps, like we were kind of mentioning, there's a lot here. Like a lot. And even as we zoom out to the actual leaps, they're still building, right? Quite a bit here. And I expect the chain here to be kind of awkward as liquidity could potentially dry up. But at any point, if they go in the money and they become, in demand, I think that the spread's going to tighten, and then they'll be worth more than other options. So I think once the chain splits, everything out of the money is going to be obliterated just because the spread and there's no liquidity for it. Like no one's chasing those strikes anymore on the old chain. And they're just going to go to the new chain with good liquidity. And, that could be bad, but I think as, the stock price climbs just due to technicals and our catalyst, that should self-correct. Again, I don't know. I'm an options amateur. I just do my best, and I'm very much interested to see how this plays out for us. So, yeah, our risks or catalysts, we can have, the warrants or dividends play out with the hedging mechanics, right? We could have a liquidity event due to the borrow cost or some form of macroeconomic stance that we don't really know about, right? That's happening every day. And then, how many days till earnings? Only 62 days until expected earnings as well. So time flies, right? Like it goes by very, very quickly. Hopefully, once things settle down, we'll have some time to start going through some basic options education just to get you, I guess, all at my level, which is adequate to make gains with GameStop. It's one of the easiest stocks to play, specifically with high-risk options. I really don't even do a lot of options on other stocks, but GameStop, I'm just so comfortable trading off the technicals and reversal signals. That bottom trend. It's just, it's a good place to be. I know a lot of people like to sell covered calls, and that used to be a cool thing to do down here, but it's become a little bit harder to do. Post bonds, the IV is so low that you're not really getting a lot for your contracts week to week, which is a bummer. I know I should still be grinding them out, but it just seems like picking up pennies in front of a steamroller personally. A lot of rambling today. Typically, I film these twice. Today, you're only getting it once, and I'll just get better at it as we go. It's too much to do it again. Have a great day. Take care of yourselves, and we'll see you soon in the next. Make sure to leave a like, drop a comment, and subscribe to the channel.